November 1910. 7 of the richest men in America board a private train. Fake names. No witnesses. Destination? Jekyll Island, a private club for Rockefellers and Vanderbilts. For 9 days, they design the system behind every dollar in your wallet. No Congress, no cameras, no records. And here's the kicker. The Federal Reserve isn't federal, and there's no reserve. Like Finny says, when bankers use fake names, you're not going duck hunting. To understand why 7 men needed to meet in secret, we need to rewind 3 years. October 1907, New York City. Picture this. Lines around city blocks, banks collapsing, people fighting to withdraw their savings before the whole system implodes. This wasn't a recession. This was financial terror. The trigger? A failed scheme to corner the copper market. When it collapsed, the dominoes fell fast. Trust companies failed, stock prices plummeted nearly 50%. Ordinary people lost everything overnight. America was the richest nation on earth, but its banking system was held together by hope and handshakes. Thousands of independent banks, no central authority, no lender of last resort. When crisis hit, there was no one to stop the bleeding. Except one man, J.P. Morgan. At 70 years old, Morgan was America's one-man central bank. He locked the nation's top bankers in his library, literally locked them in. They weren't leaving until they pooled their money and stopped the bleeding. It worked, barely. But everyone knew, when J.P. Morgan dies, who saves us then? As Finny would say, when old money gets nervous, new rules get written. 3 years later, the answer came. Not from Congress, not from the White House, but from a secret meeting on an island most Americans had never heard of. November 22nd, 1910, New Jersey rail station, late evening. 7 men arrive separately. No assistants, no entourage. They've been instructed to use only first names. If anyone asks, they're going duck hunting. But these aren't hunters. Senator Nelson Aldrich, chairman of the National Monetary Commission, one of the richest men in the Senate. Paul Warburg, German-born banking expert with deep ties to European finance. Benjamin Strong, representing the Morgan Empire, and 4 others. Together, these 7 men controlled 1/4 of America's banking capital, and they were traveling in complete secrecy. Destination? Jekyll Island, a private resort off the coast of Georgia. This was old money's playground, the kind of place where privacy isn't requested, it's inherited. For 9 days, they worked behind closed doors. No servants in the room, no stenographers, no records. Their mission? Design a central banking system that could prevent another panic without spooking the American public. See, America had tried central banks before. Twice. Both times populist outrage killed them. Americans hated the idea of a few powerful bankers controlling the nation's money. President Andrew Jackson destroyed the second bank, calling it a den of vipers and thieves. So the Jekyll Island group faced a problem. Americans hated central banks. So they built one without calling it one. Like Finny says, if you want to catch a rabbit, don't look like a fox. And that's exactly what they did. The debate lasted days. Warburg wanted European-style central control. Aldrich said that would never pass Congress. They argued, compromised, argued again, and slowly a plan emerged. They called it the Federal Reserve System, not the Central Bank of the United States. That would have been political suicide. Instead, it would be a network of 12 regional Federal Reserve Banks, giving the illusion of decentralization. But here's the trick. All 12 banks would be coordinated by a central board in Washington, D.C., so it looked decentralized, but it ran from the center. The Federal Reserve would have unprecedented power, control interest rates, issue currency, regulate banks, act as lender of last resort. And here's where it gets interesting. The regional Fed banks would be privately owned by member banks, but the Board of Governors? Appointed by the President. Let that sink in. The Federal Reserve isn't a government agency. It's a hybrid, private ownership, public responsibility. Neither fully public nor fully private. It exists in a gray zone, by design. As Finny says, it's not federal and there's no reserve, but the name sure sounds official. When the Jekyll Island meeting ended, the 7 men returned to their lives. The plan was written, but the battle had just begun. For 3 years, Senator Aldrich tried to push it through Congress, and for 3 years it kept failing.
Americans smelled Wall Street all over it. The Aldrich Plan, they called it, a banker's power grab. Farmers, populists, Midwestern politicians, they all opposed it, so the plan went underground, rebranded, tweaked. When Democrat Woodrow Wilson won the presidency in 1912, everything changed. Wilson had campaigned against the money trust, the concentration of financial power in a few hands. But behind the scenes, his advisors convinced him a Federal Reserve System could break the money trust, not strengthen it. They repackaged the plan, called it the Federal Reserve Act, made it sound progressive, decentralized, anti-Wall Street. And then they waited. December 23rd, 1913. Most of Congress already home for Christmas. The Senate barely a quorum. Like Finny says, nothing shady happens at 11 p.m. on December 23rd. No, wait. At 11:02 p.m., the Federal Reserve Act passes. President Wilson signs it into law. And just like that, the plan born on a secret island became the law of the land. The Federal Reserve was born. So here's the question that matters. Did the Jekyll Island plan work? Let's test it. Test number 1, 1929. 20 years after Aldrich and Warburg drafted their plan, the stock market crashes. The Fed's response? Tighten the money supply to discipline the market. Credit dries up, banks collapse. The Great Depression begins. The very panic the Fed was designed to prevent, it made worse. As Finny would say, great idea. Give 7 bankers the keys to the economy. What could go wrong?
Test number 2. 2008. Housing bubble bursts. Lehman Brothers collapses. This time, the Fed slashes interest rates to zero, prints trillions of dollars. The banks survive, but your wages? Stagnant. Wealth inequality explodes. The Fed stopped the panic, but the consequences ran for a decade. Test number 3. 2020. Pandemic hits. Economy freezes. In just a few months, the Fed creates $4 trillion. Unemployment drops. But 2 years later, inflation hits 9%, the highest in 40 years. So did it work? The Fed stops crashes, but it doesn't stop consequences. Like Finny says, stopping crashes is easy. Stopping consequences, not so much. Here's what connects 1910 to today. The same secrecy that birthed the Fed on Jekyll Island still defines it. Not because of conspiracy, but because central banking requires secrecy to function. If the Fed announced every move in advance, markets would panic or front-run their decisions. So Fed meetings are closed door. Decisions are debated in private. We learn the details later. The Fed chair isn't elected by design, because when politicians control money, they print it to win votes. History proves it. So we made a trade. Give up democratic control over money in exchange for economic stability. Is that a good trade? Depends on the decade. The Jekyll Island meeting didn't create a perfect system. It created a powerful one. And a century later, we're still debating whether that power protects us or just protects itself. The Fed is necessary. The Fed is fallible. That's the trade-off. Every time the Fed raises or lowers interest rates, your life changes. Your mortgage, your student loans, the price of eggs, whether you understand it or not. Understanding where the Fed came from won't change what it does, but it might change how you see it. As Finny says, you can't change the forest, but you can learn where the acorns are buried. If you think a secret island meeting is wild, wait until you hear about the con man who sold the Eiffel Tower twice for scrap metal and got away with it both times. That story's next, and it makes Jekyll Island look like amateur hour, but only if you subscribe, because YouTube's algorithm is as mysterious as the Federal Reserve and twice as unpredictable. Finny's got a new story every week. Financial history, real crimes, true cons. Hit subscribe. You won't regret it.